Bitcoin fell nearly 90% in just 1 hour on the largest cryptocurrency exchange in history. But can investors continue dealing with these deadly crypto flash crashes? And could these crashes destroy the whole world's economy if it continues like this? Well, today we're going to talk about the sudden Bitcoin flash crash that knocked Ethereum and Binance CEO's serious crypto price warning. Let's dive into it. So what exactly happened? In a major digital currency shakeup, the Bitcoin price briefly plummeted to under 10,000 per Bitcoin on the cryptocurrency exchange Binance. The sharp decline came after a morning that saw the Bitcoin price surge to an all-time high of over 65,000 per coin on some deals. The Bitcoin rally was mirrored by other major cryptocurrencies, including Ethereum and Ripple. A drop in Bitcoin price has been blamed for a flash crash on Coinbase, one of the biggest exchanges for cryptocurrency. The Bitcoin price fell from about $8,500 to $8,200 in just 10 minutes on Friday morning. By comparison, currencies generally take days or even weeks to undergo such rapid swings in value. With that being said, the Bitcoin price lost around $1,000 on Coinbase. This loss eventually led to a chain reaction, dropping the price of Ethereum and losing just above $2,000 from its fixed price of $4,000 per coin. Binance chief executive Changpeng Zhao claimed that we should expect a very high volatility in crypto over the next few months, shortly before the Binance US Bitcoin price crash. With such an unexpected flash crash, investors wanted answers. So Binance US told Bloomberg that one of their institutional traders indicated that they had a bug in their trading algorithm, which appeared to have caused the sell-off. However, Binance also mentioned that they continued to look deeper into the event, even after sorting out the issue. The crypto trading giant, however, has shared its technical analysis and recommendation for Bitcoin in a new tweet following Federal Reserve's chair Jerome Powell's dovish comments. In addition, Binance CEO Changpeng CZ Zhao also had suggested Bitcoin could pull back to $6,800 in the coming days amid signs of a potential Bitcoin bubble. The US Federal Reserve, on the other hand, is set to begin paring back its vast COVID-19 pandemic stimulus measures, which could create instability in the global financial system. Former PIMCO chief executive and Elaine's advisor Mohammed El-Arayan recently told Fox News that this whole situation on how everything is turning up is highly worrying him. He fears that since the world has been living in low volatility with everything going up, the crypto world, as we know, may come to a stop with higher volatility. Mohammed El-Arayan advised investors to recognize the enormous liquidity, wave thanks to the Fed, and also keep in mind that locks tend to break at some point, warning investors to be very attentive during this period. But could Bitcoin's instability destroy the entire economy? Since its September lows, the Bitcoin price has added 50%, continuing its quick rebound from an 80% drop in the first half of 2021. The move is likely to spur Wall Street institutions to offer more Bitcoin investment options for clients, including a highly anticipated Bitcoin future exchange traded fund ETF. Influential central banker John Cunliffe warned investors of a possible massive collapse in crypto asset prices shortly. This threat will likely happen due to the rapidly growing Bitcoin and crypto market, which might threaten America's financial system if the matter is not urgently regulated. During a speech that covered the dangerous growth of the crypto market, John Cunliffe mentioned that investors in crypto don't have to account for a large portion of the financial sector to trigger financial stability problems. He also points out that the crypto market has grown by 200% in 2021, from being worth $800 billion to a staggering $2.3 trillion. And if 2008 taught us something, investors don't have to account for a large portion of the financial sector to trigger financial stability problems. Sure, Bitcoin prices have risen considerably over the years, but in a decade of growth, Bitcoin has gone through its fair share of nightmare crashes. Remember back in May, when it reached the price of $65,000 per coin? Well, if you're a significant investor in Bitcoin, you might remember that horrible period, as just a few days later, after reaching such a price, it went into a free fall, losing 50% of its value. Crypto market risk is increasing, most obviously by the number of more prominent players who are now getting involved. Banks have been quick to capitalize with initiatives to set up crypto teams, partnerships, and acceleration of exploring blockchain technology. However, Cunliffe also said that the rapid growth in crypto assets, a growing lack of regulation, and a scaling back of retail investors' positions in Bitcoin and other cryptocurrencies could lead to a market downturn this year. So, according to Cunliffe, unless hedge funds and payment companies begin tightening the ropes and start stabilizing crypto, things will go south and will take the economy years to recover. Cunliffe also added that the financial system is growing very fast and in a largely unregulated space. Financial stability authorities have to sit up and take notice, but adding that regulators internationally and in many jurisdictions have begun the work. He still kept reminding investors that this situation needs to be resolved as a matter of urgency. emergency? Well, Coinbase is finally taking the first steps to stability. Coinbase, one of the most prominent digital currency exchanges based in the United States, called for a united and clear regulatory framework for cryptocurrency amid rising concerns among U.S. lawmakers over virtual currencies' rising prices and volatility. At a public hearing held by the United States Senate Committee on Banking, Housing, and Community Affairs, former chairman of the Commodity Futures Trading Commission, CFTC, and current head of finance at crypto exchange, San Francisco-based Coinbase, Gary Gensler, said he has been under pressure from both lawmakers and crypto enthusiasts to address their concerns over the U.S. cryptocurrency market. He was asked to look into potential rule changes or new laws that could help protect investors and clarify how tokens issued through initial coin offerings, ICOs, can be qualified as securities. Creation of a single dedicated body to regulate the crypto market, arguing existing regulators are too fragmented and U.S. security laws outdated. Gary Gensler, the chair of the U.S. Securities and Exchange Commission, SEC, has been charged by lawmakers to address their crypto market concerns. Coinbase and Binance, the two largest platforms allowing people to buy and sell cryptocurrencies like Bitcoin and Ethereum, have clashed with regulators this year as they don't have fixed headquarters. So how can these guys have trillions swirling around their businesses but can't even afford to police the emerging asset class and traditional financial systems? Go figure. Head of research at digital asset prime brokerage and exchange, Bitcoin, Martha Reyes, claimed to have welcomed further regulation in the space as it will attract more capital and interest, as this is already happening. However, it is a stretch to say that the sector threatens financial stability. This has been an annual discussion in the U.S. since early 2013, when Senator Chuck Schumer called for a crackdown on Bitcoin and other cryptocurrencies. However, after several years of talk and hearings with little to show in the proposed regulation, investors expect more stability in 2022. Will Bitcoin, however, will it still be resilient? Many experts believe that Bitcoin will succeed even though the global liquidity crisis might destroy many asset classes. This crisis has happened because the booming cryptocurrency has proven its resilience. With every passing year, it shows that it's a very flexible and reliant form of exchange. If you think about why Bitcoin is so relaxed, it tries to avoid the patterns of inflation with paper money. For example, a dollar in the 1980s is worth only 20 cents in today's capital because of inflation. But if Bitcoin is still up 50 years from now, this will not happen with its currency. Dan Shatt has predicted that if more investment funds are allowed to be invested in ETFs, Bitcoin might have a huge run. In 2020, the global economy went downhill, but at the same time, Bitcoin prices increased drastically. Experts believe that this is caused by the demand that investors have for the return of their investments. This drives investment product prices, which makes the overall economy function typically. If this goes wrong, then investors that have purchased Bitcoin will likely sell it as a digital currency, which means that Bitcoin will gain a drastic boost out of the situation. With all this being said, will Bitcoin's value ever decrease? Experts have found out that due to Bitcoin's prices increasing drastically because of the supply and demand of this digital currency, it might lead to two different situations during the Bitcoin halving process. One possibility is that the price of Bitcoin will decrease dramatically when it comes to assets and products. This will only happen if the supply is too high and the demand is low. Many Bitcoin traders are still skeptical about the next Bitcoin halving. However, they remain pretty optimistic. The CEO of BTCU, Nikolai Udiansky, claims that usually after Bitcoin halving, the digital currency price will increase again. However, investors need to keep in mind that the two previous halvings have confused Bitcoin investors, because during those years, a lot of people were enthusiastic about investing their money into this popular cryptocurrency. But in the coming years, things will be changing a lot when it comes to this situation, and there's no longer a small group of cryptocurrencies on the market. With all being said, do you think Bitcoin will ever destroy the future economy? Let us know what you think in the comments.